and thanks very much for being here. This is the very first edition of the stock pitch competition, and we have the 5 finalists online. They will be shortly presenting the findings, the analysis and evaluation of the companies they have chosen. Thanks very much, first of all, to Professor Mancini and Professor Giannozzi for organizing it. And thanks very much to Simone Biondi as well for being one of the judges on this competition. My name is Matteo Lombardo. You know, I have been presenting this competition a few months ago at in one of your lessons live. Simone, as a former student and an alumnus of the University of Florence, if you want to introduce yourself very briefly, and then we will go to the rules of the competition as well.
Yeah, sure. I graduated 5 years ago, I think, more or less, and I've been for the last 6 years in the equity research space. Before in Bloomberg and then in St. James Place, where at the moment I'm covering financials and consumer goods for a fund, and it's a kind of small fund, 5 billion fund under St. James Place, where we just deal with high net worth clients.
Your reports have already been graded by 3 investment professionals, very similar to what happens in the CFA Research Challenge, but your presentation today obviously will be very important as well. The first one to present will be Loris Affatato, and the company he has chosen is Campari.
Okay, yes,
Loris.
of goodwill intangible. So let's say that I want to start from a market overview analysis to understand which are the conditions of the overall market, and to understand what can we expect from the next months, having the coronavirus effect, for example. And so let's see the stock market. Other bad news come from Eurostat, which estimates a European Union GDP will drop of 7.5% this year, with a partial rebound of 6% in 2021. Now I will focus on Campari stock price chart. I have analyzed with the technical analysis some key patterns, but I want to stress the fact that before coronavirus crisis, the price was at the maximum level, which is about 9.10 euros. And after this shock, the price dropped to 5.54 euros.
Simone, Professor Giannozzi, Professor Mancino. Simone,
yeah, I can just kick off.
Yeah,
I'm just going to kick off. Just want to ask you, I think you have in one of the slides, how did you calculate the cost of equity? And in your report, you said you consider 7% to be a little bit high. Why do you consider that has been high?
To compute the cost of equity, I use as a risk-free rate the Euro short-term rate, because I think that the Italian 10 years BTP was too heavy, too riskful in this moment. Then the problem of these cost of equity is due to principally the equity risk premium that I take from the modern sites, that in Italy is very high, about over 10%.
And thanks very much for answering the questions. Next company up is Alibaba. So Eduardo, up to you.
Okay, thank you. Okay, I'm ready.
Time starts now.
Perfect. I want to introduce you into the opportunity of buying Alibaba stocks. Why? because this is not the common Chinese company that focused on the past and culture, but as Jack Ma quoted once, it's based on yesterday, but they are always looking for a better tomorrow. So what they want to do is to improve, increase, change people behaves and people lives. Alibaba is a market mover, as you may know, but I still think that there are too many that don't know what Alibaba properly is. Actually, Alibaba is not just the B2B giant that we all know, but the core business is made by the B2C one, led by Tmall and Taobao, that are the biggest wholesaler of China. As you can see, Alibaba controls the 56% of Chinese e-commerce market. That's a very fast-growing market.
Feel free to ask more questions, Simone.
Another question, just quite interesting for me, is you mentioned in your report that you're forecasting a devaluation in the renminbi, the Chinese currency, of 10-15%. I just want to understand what kind of assumption you have behind the devaluation.
Okay, I think that trade wars can be one of the main reasons to do it. Still, China is a very exporting country. Their commercial balance is still in the export side. So to remain, how to say, a good player in
Intel, Gabriele, you ready?
Yes, I'm ready.
Okay.
Can you hear me? Can you hear me?
Yes.
Okay.
And we can also see your presentation.
Okay, good.
So your time starts now.
Yes, so good evening to everyone. The company that I've chosen for my analysis is Intel Corporation, and my suggestion is to hold the share of this company until they reach the target price of $65 per share. And I would like to do a brief background and framework about Intel. Intel is a company which operates in semiconductors market. So when we are talking about semiconductors, we are talking about all these elements necessary to properly work for technological devices like personal computers, modems, and so on. Of course, there are some opportunities for Intel. In particular, the diversification could be not just geographical, but also of the product. We have, for instance, the gaming market, which is increasing year over year. It's important. So focusing on GPU and gaming devices could be one solution, as AMD already does. And the most important opportunity, I think, always is the data-centric activities, because this market is increasing, and the expectation is that will increase of more than 12% compound average growth rate. So in this kind of market, the strength of Intel could be to touch every step of the data-centric process, starting from the collection of data to the organization, and at the end, the use of this data. And Intel is one of the few companies that could do all these steps alone. Okay, I think that right now the market of Intel, the microprocessors market in particular, is a little bit full of Intel products. This is because the 80% of this market is in the hand of Intel. So this is maybe the main reason for the underperformance of the company. And in the future, always the same transition toward data-centric activity could be the driver to increase the performance of the company. So this is my opinion and my thesis about the investment. And in the long term, I said that...
Let's move on. And next up is San Lorenzo. Leonardo, here to you.
Okay.
And your time starts now.
Okay, so San Lorenzo is an Italian company in the yacht luxury industry. An important thing of this company is that is the only one company in this field, so in the yacht production field, listed on a market all over the world. So there is no one competitor listed on a market. And only Ferretti Group, that is an important Italian competitor, tried listing on October-November 2019, but then gave up because thought that the market made a price that was unsatisfactory. San Lorenzo is a world leader in segment of 30 meters yacht, with a strong brand, a worldwide recognized brand, and with mainly ultra-high net worth individual and yacht charters companies are main customers. Development and risk, because obviously there is the risk of the international economic downturn, the environmental issue and environmental law, and tax burden on luxury goods. And then for the development side, San Lorenzo will want to grow in the premium price placement, growth in super yacht division, and as I say, the expansion in North American market. The growth rate of 8% was for the, let's say, the total group of the luxury market. And I found that also for this 12% for the yacht market. So I think that San Lorenzo is a, let's say,
now we go back to COIMA-RES. Nicola.
So good evening to everybody. I'm going to talk about COIMA-RES, and to start the presentation in the next slide, I want to show a little brief about my firm. Next slide, please. COIMA-RES is a real estate investment. SIIQ is an Italian acronym for Società di Investimento Immobiliare Quotata. That is a firm with a specific financial structure and rules that have a useful fiscal regime. The activity of COIMA-RES is focused on Milan and in particular in the office segment. The operating activity is the active management of their investments. My advice to this stock is to buy, and the 1 year target price is 11.15. The strategic drivers of my firm is the office sector in Milan, because this sector have a growth trend in the last year about the demand and
in current investments. Just want to understand, how do you think that's a sustainable such an increase, and why, if you have capex increasing so much, the forecast of the D&A, depreciation and amortization, and EBIT are stable?
Because I think that it's related to the activity, operating activity.
Okay, guys, students, presenters, observers, professors, really, really well done, and thanks very much for participating in this challenge. We really appreciated that the finalists have presented 5 very different companies located in different geographies and doing very different businesses. Some of them were not even very easy for a student to analyze. So on that, congratulations to all the 5 of you. Obviously, we know that you are not experienced analysts or portfolio managers. So without much further ado, the winner of the very first University of Florence stock pitch competition is Gabriele Ferraris with Intel. Congratulations, Gabriele.
Thank you so much.
It wasn't an easy decision, because all the, let's call them grades at the end, were very, very close, but a competition is a competition, so we must have a winner, and this time it was Intel. Again, congratulations to Gabriele, of course, but congratulations to all the other finalists as well.
Thank you. Thank you.
Congratulate the student, all of them, and also to thank Dr. Lombardo, for spending this time and giving you this very peculiar opportunity. So I think we'll be just the first one, and surely the other students in the first year and the many coming in September, the new ones, will be happy, and they will participate in this stop pitch and later on in the challenge also. So thank you, Matteo, very much, and we hope to continue this collaboration with you.